Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Friday, February 2nd, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'll start with this one showing you the big picture. We still have loads of long-term support in the 163.39 to 164.80 region. This is a weekly bar chart. I don't expect to see this anytime soon at all, actually. In fact, it does become an objective if we were to close today, the week itself, below 177.98, but that is not going to happen, I'm quite sure. If it did, then sure, we will fall back within 3 to 5 weeks to this longer-term support at 163.39 to 164.80. We settled above this channel top for the first time last May. That set off a long-term show of strength that I am still anticipating 236.50, this 4-year channel top, over the next, well, by the end of the year, I still think is likely. Preceding that, 177.98 can contain selling into March trade, and from there we can round back up to new highs within a matter of 3 to 5 weeks at the soonest, couple of months at the longest. Now, we can fall, and in fact, we are expecting as a technical objective the upper 170s, possibly by the end of next week, but I think over the next 2 to 3 weeks anyway, holding below 187.33. It was this horizontal channel top that when we settled above it about 2 or 3 weeks ago, set off a buy signal that was expected to yield 199.62 as a 2 to 3 week target. That obviously didn't happen. We gapped below this structure on Wednesday. It is we're still below it on Thursday. If settled above, it would pivot the market north again into later February. But until then, we are expecting the 177 handle support. And I'll also mention, and if you're looking at the 177 even to 177.98 weekly chart, there's also an intermediate channel bottom stemming off of these highs against this low that comes in at 177.81. So there's a lot in this area. Very respectable zone of support that, if tested over the next couple of weeks, can absorb selling into March trade, and from here we can round back up to new highs within a matter of a month or two. Now let's take a look at the downside. Holding below 187.33, 182.76 remains in reach today, where a daily low can be placed, and if we close today below 182.76, nothing more than the high of the low from early January, then I think by the end of next week we will likely fall into that significant 177 handle support, where we can bottom out once again into March trade, and from there round back up to new highs within a couple of months. Now for the upside, a pushing or opening today above 187.33. Is 191.58 in reach? I doubt it. But it is a 5/8 upside Fibonacci over the last week and a half of activity, and it can contain session strength. What I will say is if we close today above 187.33, and if you are short the market anticipating the 177 handle, my suggestion is to exit that short position, cover the short position, and consider going long. Going long for the 2 to 3, 3 to 5 day swing trader would be up to 191.58. For the 1 to 2 week swing trader, up to 196.16, and for the 2 to 3 week swing trader, once again we'd anticipate 199.62 over that 2 to 3 week time frame if we close today above 187.33. So despite the fact that we've violated this horizontal channel structure, it's still, I think, representative of the 2 to 3 week time frame. Holding below it, expecting the 177 handle. Closing above it, expecting the 199 handle. It's about as simple as I can get on that. On the way down today, we have a series of minor points, but none of them stand out as being overly significant. I'll take you back to this chart in terms of where to buy the market presently. That would be 182.76 on a day trade basis only. But keep in mind that we're expecting the 177 handle, and if we close today below 182.76, we should see the 177 handle support within about 3 to 5 days, where once again we can bottom out into March trade. Upside, pushing or opening above 187.33 does signal 190.10 today, and closing above 187.33 indicates 191.58 Monday, Tuesday of next week, 196.16 within 1 to 2 weeks at the very most, probably more like 1 full week of trade, and 199.62 within 2-3 weeks. So if we close above 187.33 and your time horizon is anywhere from several days to several weeks, I see no good reason to be short the market until we actually, within several days, reach 191.58 and within several weeks reach 199.52. I don't know if there's really anything else that needs to be said. I think I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We offer lots of good information that you can see for free for 5 days. Check out our 5-day free trial. If you don't like what you see, you can bow out at no cost to you whatsoever. I'm going to leave it at that for Friday's Apple Report. I'll be back Sunday afternoon with Mondays. You have a great weekend.